Hey folks, Dan Frio, the Mortgage Update. Today is May 8th, 2020. TGIF to everybody out there. I wanted to get back to doing the daily rate update. So I think I'm going to rename my website and also rename some of the other stuff that I have. So I'm going to ask you to, give me a message down below. Do you like better the rateupdate.com or homemortgageupdate.com? So home mortgage update or the rate update. So let me know. The winner will be what we go out and get, and I own all those names, so don't worry about it. I got them all. So what I want to talk about today is what happened in the market. Well, the unemployment rate just spiked to over 14%, and the most people ever filed for unemployment. Over 20 million people applied for unemployment. That's nuts. Here, let me go on to a little caption here. Hold on one second. I was looking at this chart, but let's go over to today's news. So unemployment went to over 14% and 22 million job losses so far. So if I were to say that in any other time, basically the stock market would be completely crashed and gone, obliterated. But what we saw today is the stock market go up. Weird, but not as weird as I'm thinking things are going to be. So here's my projection on where I think we're going with everything. A lot of states are starting to open up right now. I'm in the state of Illinois. The Illinois government has already bankrupted the state. Now they're trying to bankrupt all the citizens. I'll leave that on the side. Political and religious comments, I'll leave to another social platform. But again, if we saw unemployment plummet this bad, or employment, the whole world would crash. Well, basically, we've already been there. So I think, we've hit bottom. These numbers are going to get worse because I think this is the first week of April or the first 2 weeks of April, and it just progressively got worse throughout the rest of that month. But now a lot of states are starting to open back up. And you're going to see, I still predict within the next 60 days, everybody will be back to work. In the next 60 to 90 days after that, we will remember this, but I think everything is going to come back robustly. So that being said, you see the stock market actually increasing today, and I think they feel the sentiment I feel as well. And mortgage rates didn't really move that much, and I'm going to show you that in a second. And the stability is really helping out quite a bit. So I'm not going over the employment rates and the freight indexes and everything else because we all know it's bad. So what I'm going to start to predict now is as states start to open back up, how all these things that we follow, how they are going to come back to normal levels, and then what we're going to see from there. Here's my prediction. Again, 60 days out, everybody's kind of getting back to work. Another 90 days from there, back to as normal as we can get it within the next year. But you're going to see mostly everybody getting back to work, spending spike. People are going to go out and start living life, a little more robust. I've had several friends in the past who had cancer, and then, thank God, a lot of them have been cured, and they have a whole new outlook on life, and hopefully that's where we all get. So you might go out to dinner more often with your family, spend more time with your family, go out and buy a new car. I see a lot of that stuff going to pick up. That's what my prediction is. And I think that's what the stock market is starting to gauge with that as well. The one thing that's going to haunt people again is right here. There are 4.1 million loans in forbearance. And again, I can't stress this enough. This is going to put a lot of homeowners in a really bad position 3 or 4 months down the road. And it is right now putting a lot of lenders in a really bad spot. You can start to see, go to a lot of the websites that most people go to when they're looking for a mortgage rate. They go to bankrate.com and they check a lot of other different websites, and you don't see a lot of these companies such as Quicken, Guaranteed Rate, Wells Fargo, Chase, Citibank. A lot of those major mortgage companies aren't posting anymore. Why is that? Well, a lot of them are struggling. That's just the facts, and this will back up the facts that I'm telling you. Just because the homeowner is not making payments, the servicer still has to pay the interest on those loans, plus the taxes and insurance to keep everybody's taxes and insurance intact. So that's taking a huge toll on servicers. We do not service, and that's what's kind of setting us apart from the rest. And we are doing more loans now than we've ever done in the past, and we're doing them quicker than we've really ever done in the past. We are hiring where everybody else is getting rid of people. So we're in a very good spot there. Just the last piece of the puzzle on this front, stocks, as you see, are up. Well, here you saw it was refreshed. 20 million people are unemployed, and you're going to see the stock market actually rising 350 points. That's nuts. But that's basically the sentiment I have. I think a lot of the economists have as well. So let's go on to what happens today. We saw basically a flat market. Okay, so what I was saying back months ago or a month ago was this was going bonkers, and this was playing havoc on a lot of lenders. Well, now we've been pleading for normalcy. This is a normal market, people. Okay, so rates are basically stagnant at this point. However, what's happening is the forbearance is taking a toll on a lot of lenders who now aren't offering programs. There's companies out there that will not refinance your loan and give you cash out unless you have 6 months of reserves in the bank, 6 months of your mortgage payment in the bank today before you can even cash out. Others aren't even doing it. They're not even taking your application if you're looking for a cash out. Some are not taking your application unless you have a mortgage with them currently. Other companies are requiring a 700 credit score to do a loan. Chase and I think Wells Fargo, I might be wrong. There's two of the major players out there right now. If you're buying a home, you need a 700 credit score and 20% down. The only thing I've changed in the last 45 days is we now are requiring on FHA loans a 620 credit score. But we are doing cash out. We're doing streamlines. We're inundated with streamlines right now. So thank you everybody out there that had an FHA and VA loan. Keep them coming. We're locking almost everybody right around 3%, maybe a tick lower or a tick higher. But that's where we're at. So if you have a 30-year loan or you have a mortgage right now that's over 3.5%, let me know. I'd love to help. So let me explain a little bit what I do and why we watch this number and why people come to my channel. My name is Dan Frio. I do the mortgage update every day. You can hear me I'm a radio personality in Chicago. I've been doing it for 13 years in Chicago and radio, but I've been a mortgage advisor for over 32 years. And what I talk about is I educate you. And one of the things is I thought of it today. I have a domain that is therateupdate.com. If you break that out, the rate update, it's TRU. True. And I was thinking, you know what? That's what I'm trying to do on this channel. I'm trying to give you the truth about mortgages, about rates, about fees, about the whole thing. I'm not here to bamboozle you on anything, to pull a fast one on you at the last minute. I'll go over all your numbers. I'll make it make sense. I don't think it makes sense to pay $5,000, $6,000, $8,000 for a mortgage, and I'm not going to push you into it or even propose you to do that. So I give you the truth about all of this stuff. Okay, so now on to what we watch. People come and watch me every day. They want to see, Dan, what's going on with mortgage programs and what's going on with rates, mostly. Rates and fees. So they come here every day and we monitor this number right here. This is the mortgage-backed securities is a bond that this is the instrument, the tool, the investment that dictates mortgage rates. This is the biggest piece of the puzzle in that, other than profit margins by the lenders. So this is the price of the bonds. And with any other bond, and I'll just teach you Bonds 101, if you pay more for a bond, you get a lower rate of return. So a $100 bond, if I pay you $100 for a $100 bond, my rate of return is zero because I'm not making any money. If I'm give you $50 for a $100 bond, I get a 100% rate of return because I'm going to double my money. So we want we want to pay up in this realm because the higher the price, the lower the rate. Okay. So I'm just trying to teach you how to invest in bonds. You want to pay on that side of the equation, you want a high yield. So you want to pay low when you're investing. When you're trying to get a mortgage, you want a low rate, so you want to pay high. So you want this number here to be high. Hopefully that makes sense. So as this number goes up, rates come down. As this number goes down, rates go up. We love when there's stagnation in the markets, and the stability is helping the mortgage companies tremendously right now. So there's really nothing going on in here. Basically, the federal government is coming in and buying up mortgage-backed securities to keep everything stable. That is great. Again, what I'm going to tell you right now is pigs get fat, hogs get slaughtered. When everything goes back to normalcy, you have the Fed that is pumping in trillions of dollars in stimulus that is going to affect the markets at some point. Rates are going to go up. And I think you're going to have a window here of, I think the next year is going to be okay, but you're not going to see these numbers hopefully ever again in our lifetime unless the markets crash again. So please take advantage of it. So those out there that are looking for a mortgage, please let me know. Companies are obligated to send you what's called a loan estimate when you start the mortgage process with them. You have to start the process for them to be able to generate a loan estimate. So you might just want to call them up and just ask them for, what are your rates and fees and all this other stuff. Let me know. But most people are sending me their loan estimates, and I'm comparing them. I did, I think, 8 today, and we beat 5 of them. The other 3, they were a long way in the process, and they're like, there was a benefit on actually all 3 of those, but not enough for them to pull out on where they're at now to go with me. So please email me your loan estimates, and I'll give you my email number or address at the end. If your rate is on your mortgage is over 3.5% to 4%, please do something. Email me a copy of your mortgage statement and what you think your credit score is. I'll get back with you within probably an hour and say, here's what I can or can't do. And then we'll talk personally and see if it makes sense to see where you're at with things. So right now, what we're looking at on rates is, and I'll do an analysis. I usually try to do it Tuesdays and Thursdays where I'm at versus all the other lenders. Right now on the conventional generic rates, we're in the low 3s on a 30-year fixed. On government loans, which is FHA, USDA, and VA, we're right around 2.875. These do vary based on your loan amount, your credit score, and what we call your loan to value, meaning your loan amount divided by the value of your property. So those are those things. But right now, there's really no news. The employment numbers are terrible. GDP is terrible. Inflation is great because nobody's doing anything. There's really nothing other than what I can tell you is, in the next 60 to 90 days, we're going to have a recovery in the markets, not full recovery, but within 6 to 8 months, we should be, where we need to be. And you're going to see rates. I'm expecting about 0.5% higher 6 months from now than they are today. So do something. To reach me, the best way to get me is honestly, give us a call, 844-775-LOAN, which is 5626. Email me at D for Dan, Frio, Frio, at preferredrate.com. Give me a call, shoot me an email, or visit our site. You can go to thefrioteam.com or therateupdate.com or homemortgageupdate.com. So if you would, please tell me down below, what do you think is the best? The Frio team, the rate update, or home mortgage? Gosh darn it, I forget what it is. Home mortgage update. Home mortgage update. That's it. So love to hear from you. Have a great Friday. Please give me a thumbs up if you like the video. Don't forget to subscribe down below. Leave some comments. I reply to every comment. I'm going to catch up this weekend, I promise you. So God bless. Have a great weekend, and I'll see you Monday, same time, same place. Bye-bye.